In 2025 and 2026, the US dollar declined against major currencies, and the dollar's share of global reserves continued its multi-decade slide. The last time dollar credibility faced an existential structural challenge, August 1971. This is that archive. This is an archive of the 1971 Bretton Woods collapse, the Nixon shock. Historical data only, not a forecast, not investment advice. Chapter 1. The Bretton Woods System, 1944 to 1971. The Bretton Woods Agreement of July 1944 established the post-war monetary order. The US dollar was fixed to gold at $35 per ounce. All other major currencies were fixed to the dollar within a 1% band. The system made the United States the anchor of global monetary stability. Foreign central banks could redeem dollars for gold at the fixed rate, which constrained US monetary expansion. By the 1960s, the constraints were eroding. The Vietnam War and Great Society spending created fiscal deficits. The US balance of payments moved into deficit. More dollars circulated globally than the gold stock could support at $35 per ounce. Chapter 2. The Triffin Dilemma. Economist Robert Triffin had identified the inherent tension in 1960. A country whose currency serves as global reserve must run current account deficits to supply the world with that currency. But persistent deficits eventually undermine confidence in the currency. The reserve currency is structurally required to debase itself. By 1971, France under de Gaulle had been redeeming dollars for gold, drawing down the US gold stock. US gold reserves had fallen from $22 billion in 1958 to approximately $10 billion by 1971, while dollar liabilities to foreign central banks exceeded $13 billion. Chapter 3. The Nixon Shock, August 15, 1971. On Sunday evening, the 15th of August 1971, President Nixon announced in a television address that the United States would immediately suspend the convertibility of dollars into gold. The fixed exchange rate system was ended unilaterally. Simultaneously, Nixon imposed a 90-day wage and price freeze and a 10% surcharge on all imports, the latter designed to force currency revaluations among trading partners. The announcement was not preceded by international consultation. Allied governments learned of it the same evening. The West German Bundesbank suspended foreign exchange market operations the following morning. Chapter 4. The Documented Aftermath. The Smithsonian Agreement of December 1971 attempted to restore a modified fixed-rate system. The dollar was devalued to $38 per ounce of gold, and other currencies were revalued. Nixon described it as the greatest monetary agreement in the history of the world. The Smithsonian system lasted 14 months. By March 1973, major currencies had moved to floating exchange rates. The gold convertibility of the dollar was never restored. The dollar fell approximately 12% on a trade-weighted basis between 1971 and 1973, as currencies adjusted to their market levels. Chapter 5. The Structural Consequences. The end of Bretton Woods removed the external constraint on US monetary expansion. The Federal Reserve was no longer obligated to defend a gold conversion rate. This structural change contributed to the inflationary environment of the 1970s. The petrodollar arrangement that followed, oil priced in dollars, recycled through US Treasury markets, provided a functional replacement for the gold constraint. It was not a formal treaty, but an operating arrangement that extended dollar reserve status. The dollar's share of global foreign exchange reserves has declined from approximately 70% in the 1970s to approximately 58% by the mid-2020s, a documented long-run trend that has not produced a reserve currency transition. Chapter 6. What the historical record shows. This archive does not predict whether the current decline in dollar reserve share will accelerate. It documents the 1971 sequence: fiscal pressure, gold drain, unilateral suspension, attempted restoration, failed restoration, floating exchange rates. The archive stays open. The sequence is what the historical record shows.